Don't overthink it because I think we get stuck in like analysis paralysis. It's perfectly fine to roll it out to a very small audience. Wanting to make the offering perfect can leave you in a position where you don't roll it out.
Welcome to Deduct This, powered by ProConnect Tax. This is where tax professionals come together to share ideas, experiences, and fresh perspectives to help you grow your practice and your future. We're glad you're here. Let's get started.
Hi, welcome to the Deduct This podcast with Carrie and Lexi. I'm Carrie.
And I'm Lexi. Today's episode is all about taking the first step into moving into tax planning and advisory, not in theory, but in actual real life.
Oh, I'm so excited. Today we are joined by Al-Nesha Jones. Hi, Al-Nesha. How are you?
I'm good. Thank you so much for having me. I'm so excited to be with you too.
Oh, we are so excited to talk to you. And you have so much experience that we'd love to dive into. You have told us we've known each other for quite a while now, so that's why we're so excited to have you. And you've been revolutionary in some of the things that you've been doing in your practice. And one of it is really about building and delivering planning packages for clients. You do that with ProConnect and you use Intuit Tax Advisor. Can you tell us a little bit more about how you made that work?
So we went through that 2020 tax season, and that was a really tough tax season because the kids were doing virtual learning. And for the first time, my husband and I were sharing a home office, and clients had tons of questions about PPP and EIDL. And we thought that was a tough tax season until we got to 2021. And when we did those 2020 tax returns, that's when it clicked that the way we had been doing it just wasn't going to cut it anymore. Clients needed help. These were strangers. We did not know these people. They had bought houses, sold houses, got married, got divorced, had kids, moved to North Carolina because their jobs were remote. We were so ill prepared, and we did so much paid work for little to no money because it was tax season, right? And it was like, just get the work done. And that should have been billable work. So we say, you know what, let's take a break from taking on new clients. And let's just think about how we get ahead of the work, how we get ahead of the client. How do we become more proactive? And instead of making advisory something that had previously been optional, we didn't have a term for it. We didn't have a standardized way of providing it. We stripped all of our packages and looked into making it required. It was built in because clients have questions, right? If they didn't have questions, after April 15th, we'd be on a beach somewhere for the rest of the year, but we spend all year looking at our inboxes. So we just built it into the package. And all new clients, hey, listen, this is what we're offering you, varying levels of advisory. And for our existing clients, to avoid like a mass exodus, because that's what I was terrified of, we rolled it out over a 3-year period. That felt more manageable for me. That felt more realistic for myself and for my team. But the biggest part of it was saying, hey, it's not an option anymore. It's required. You will talk to us at minimum 2 times a year. Most people talk to us 4 times a year, and some people even more than that. And it made a huge difference in how we work and also how we support our clients.
Okay, digging into the packages and knowing that you needed to make that shift, how did you even go about knowing what to include in that first package and building that and decide what you were going to do first?
We started with the easiest possible services. So what are clients asking us for most often? And what could we do without creating like a ton of extra work for ourselves? So at first it was just custom estimated tax recommendations based on how you anticipate the upcoming year being. For wage earners, W-4 recommendations, because believe it or not, we still see new clients come in and they need major help with their withholding for a number of reasons. So it was, what could we do to make an impact without creating a whole lot of work? And it started with clients who have balances due, because I think they are the most receptive to getting some assistance. So it was, let's just parse those clients out and then let's assist them with reducing the penalties, reducing the interest, reducing the surprise around having a balance due. So at first it was just, how do we help this issue? And then eventually we got into more of the planning, more of the strategy, more of the let's employ this. But at first it was just a very, very low manageable lift. It was also something we could offer at a lower price point just to see if clients would be receptive to it.
How does it work exactly? So if I'm a new client, do you have a preset of packages that you're like A, B, C, and D, for example, and then you offer it? Or do you, yes, that's what you do? Or do you talk to them first and then go, ooh, let's figure out where we're going to go here?
Phenomenal question. So we do a mix of the two. So if you come to our website, you're going to see, hey, listen, here are our packages. If you are an individual without self-employment income, or if you do have self-employment income, we treat those a little bit different. That helps us in two ways. One, it helps us filter out clients who don't think this kind of relationship is ideal for them, because now we don't waste a lot of time talking to clients who are going to say this is out of my budget, or I'm not looking for that level of support. So you can see the packages right on the website with starting prices. Once you submit your inquiry form, because we have questions we want to ask you, including, did you take a look at the pricing before you scheduled this call?
Right.
And then we talk to them about what their needs are, what their expectations are. One of the questions on that form is, how could we be most supportive to you? Are there any problems that you're trying to solve? And if you pick the base package, but you tell us during the call that you would love to have someone you could reach out to nonstop, you don't belong in the base package. So it's a blend of where would you like to be, and then based on what we've learned about you, where do you ideally land? And that's also helped us with managing the scope creep, because previously people would pick that lowest tier, and because they're the loudest ones in the inbox and wanting to be proactive, like, oh yeah, just get back to them, just get back to them. But now we know exactly what tier clients are in, so we can better serve them at the level in which they selected, as opposed to just overwhelming ourselves with like, oh, they keep sending messages. So a little blend of both sort of like strategies.
That's awesome. And you said a key thing, and you said that, this was a change for your clients, right? And that you ended up having to fire some clients, right? Because you were changing the model.
Yeah.
Can you talk a little bit about how your clients and your customers responded and kind of that process? Because we know a lot of your peers, this is a fear of theirs to do this, and this is the reason.
It's a valid fear. What I will say is, in the beginning, we were unsure about it. So I think that made clients leery, because we were like, well, we're doing this thing, and if you want to give us more money, I mean, we're happy to do these services, and would you pay for it? And I think because we sounded unsure, they were unsure as to whether or not they should trust us with this. I think when we got more confident and built out the offer, it was not perfect. We didn't have every detail nailed down, but we knew what we were going to offer. And then we could come to them and say, hey, here's the additional value we want to offer you. It does impact the pricing model. This is what that shift is going to be. When we got more confident, the responses got a lot better. And because we started with clients who we knew needed the support, I think that also helped us to get a better reaction. That does not mean everybody loved it. Plenty of people, and not plenty, but some people said, like, absolutely not. I don't need that level of support. I don't want to pay the increased fee. And one of my lovely colleague says, you always invite those people to be successful somewhere else. And we had to get comfortable with that, saying we may not be the right fit for you, but that created capacity for the clients that we were the right fit for. And where I thought we were going to lose a ton of clients, we didn't. And at no point did we drop in revenue. We actually increased with revenue, even with cutting clients. Our workflow got simpler. Yeah, it just required us to get serious about really identifying what it is that we were offering and how it benefited the client. The client cares about what changes this is going to make for them. How does it make their life easier?
So interesting. So how did you go about figuring out what each package included and how you would price it? Was it conversations with peers? Did you find a resource online? Like, tell me about that process.
Yeah, it was some conversations with peers. Another one of my great colleagues, she was saying that she made her minimum fee $1,500. And I was like, well, how'd you come up with that? And she said, I looked at what the average fee we charge people, and I just put a percent, maybe 25% or 30%, whatever that was. And I said, okay, then we'll start with that. We'll start with what would we like our minimum fee to be based on what our average client pays. Now, I will say that we have a pretty simple ideal client. The majority of our clients have multiple streams of income. They have some form of self-employment income. They live or work in New Jersey, New York, Connecticut, or Pennsylvania. So we really know what they look like. We know the types of income they have. They might have 1 or 2 rental properties. None of our clients have 20 rental properties. That's not our thing. So because we know you are most likely going to file on the individual side a Schedule A, a Schedule C, a Schedule E, maybe a Schedule B, a Schedule D. Let's just plan for that, right? And let's just build that into the package. And then if we need to make some adjustments for that, then we make those adjustments as necessary. So it was conversations with peers, but it was also looking at our own clients and saying, what do we charge our average client? And what do we never want to do a tax return for less for? And then we've tweaked it from there.
It's brilliant.
I
No,
love
it's
it.
so smart. And I mean, rumor has it too, knowing and seeing your progression over the years, you've moved to a 4-day work week for your entire office, correct?
Oh my
And
gosh.
it's benefited jobs.
Oh,
In ways you can't even imagine. And people said like, oh, you can't do that like during tax season. I was like, I mean, we're just going to try. And we did not try it during tax season. We tried it after tax season, but it worked so well. It was like, let's try it during tax season. And I would never stand before you and say, I don't ever work a Friday during tax season. I do. If I work a Friday, it's probably because I travel during tax season, or I have 3 kids, so something happened with the kids and I needed to like reallocate work. But we have successfully eliminated client meetings, team meetings on Fridays. There are no expectations that someone is available on Fridays. Very rarely do I see a team member online on Fridays if I'm online.
Amazing.
And that's exactly how it was meant to be. And if it is that I do work a Friday, I don't send an email to anybody, not a client or a team member. I will schedule it for Monday morning just so that I don't create this like false sense of we don't work Fridays, but if you see my email, you better log. I just don't want that for anybody. And our clients respect it. And we've seen some of our clients even adopt a 4-day work week. It's been
Unreal.
game changing.
That's amazing.
oh, I love that. I would love that.
I know.
Sounds absolutely amazing. We got to figure out how to implement that across the board. One other thing that I've realized when, I've talked to hundreds of pros throughout the year and years. And, I love this idea again of these packages. One thing I've heard over and over again is that people feel like they get stuck in a pricing model. And, inflation, things are going up, right? The prices are changing every single day across the board for everything. So do you reevaluate, if you have somebody on, let's call it package A or something, and that package is $2,500. Do you guys take a moment and go, let's look at our packages this next year as we re-engage with our clients? We're going to reintroduce and go, all right, we're re-upping. And this year, this same package for this, you're going to get these exact same things. And this year it's $2,700 or whatnot. Do you guys do that?
Every year. And we went through a period during COVID where we didn't raise prices. And that was a mistake. The initial thought was people are going through so much, right? They're already so stressed. They can't get groceries. Jobs are changing. How dare we raise our prices? But it didn't stop our service providers and our vendors from raising their prices. So that was a major mistake. And in hindsight, I wish that wouldn't have been the case, but I can't take that back. We've learned from it since then. It is in our engagement letters. And I think it's so important. Communication is key in everything. If clients know and expect that it is well within your right to increase prices on an annual basis solely because costs increase, and we make that very clear in the engagement letter, I think that makes the conversation better. I'm a softie, so I've also removed myself from many of the pricing conversations because if you're like, oh yeah, my cat's sick, I'm like, oh, would a discount help? So it's best that I'm not directly involved in that conversation. But also we use Ignition for like proposals and things like that. And that helps because again, we don't have to call every client, hey, we're increasing the price. We can apply that price increase, automatically get the proposals out. And because we don't raise prices significantly, our suggestion is 7 to 10%. We tell clients you can expect a 7 to 10% increase just because we've changed from year to year. Clients don't tend to freak out about it. In addition to those standard increases though, client needs change. And on a client by client basis, we have to evaluate, are we still meeting your needs in this package? So in addition to doing that annual increase, we also look at our clients to see if they're in the right package based on their needs, based on how their income streams have changed. But pricing is key. I don't think accountants raise prices enough. I think it is something that we definitely need to prioritize. And I think we think our clients are sometimes more price sensitive than they actually are.
Oh, I agree. I've heard it for years that people have said that they don't want to do it. And then they're saying, I'm actually losing money sometimes. I'm like, then you should, every other price that we experience has gone up.
Exactly.
So why isn't your value going up as well year over year, right? Like, but there's such a fear of losing clients because of this. And it's like, well, wait a minute, you're losing money, but you're doing a service. That doesn't make sense.
I agree, 100%. I agree.
Absolutely. And I do think that, Carrie, you bring up a great point. Like that is what's holding a lot of your peers and people in this profession back from moving towards these models is that fear of what are the clients going to say um, these different sticker prices that may shock their clients. So I
Hmm.
want to talk a little bit about that. If you were to speak to your peers
Hmm.
about one, how you would get started with this, if they want to move to a model of expanding into more of the planning and advisory and not just the compliance portion.
Hmm.
What's your advice to them?
Don't overthink it. Because I think we get stuck in like analysis paralysis, or at least I do. And wanting to make the offering perfect can leave you in a position where you don't roll it out, right? Because you're just like, oh, I have to do one more thing. I have to do one more thing. I think it's perfectly fine to roll it out to a very small audience. Right. When we were doing this, we had different conversations with different clients, and we would tell this client that the package was this much, but we'd tell this client the package was this much, just to see what their responses were going to be. We didn't roll it out to all clients at the same time. We also look back at our notes. We use a CRM platform, and we look back to what did clients say they left their other accountant for?
Yeah.
Why are you here in the first place, right? And time again, people said, I just wanted them to be more available to me. I wanted them to answer my emails faster. I wish I could have gotten advice from them. Those things all equate to different forms of advisory. So that's how we shape the package and shape that value proposition. When we did the packages, some of those packages have increased communication time responses, right? So you want this package, we'll respond to the emails within 2 business days, because there are times that we don't always get to respond that quickly, or you'll be able to get a call on the calendar within 3 business days. So just creating packages that meet your client's needs. Look back to what they actually wanted and then propose that to them. Propose it to a small audience. See what those clients say about it. And then you can roll it out in a bigger way, but don't overthink it to the point that you never do it. Because that stops a lot of us from doing it. I think
Yeah.
accountants are meant to do like perfect or nothing, and that's really hard.
So smart.
Yeah, I love that. I love the idea of testing it with different clients, right?
Yeah.
See if there's a there, or also see if they just pass out from the craziness, and you're like, maybe I'll dial that one back a little bit because that felt a
Exactly.
little extreme. So do you have, so obviously you've talked about different kinds of returns, the types of clients and the location of the clients. So do all of your packages include advisory? And when we think about advisory, right? Tax advisory specifically, but either for personal and or for business. Do they all include that?
They all include some form of advisory. So in that lowest tier package, that is really meant for someone who has pretty straightforward income and having a couple of conversations during the year, getting some support with estimated taxes, being able to ask some questions that would meet their needs, right? And then we have other clients where I really need some tax planning. I really need to be able to impact the bottom line. I want to know what changes I can truly make that will save me in taxes, that will save me in headaches. So there are some more advanced tax advisory needs there, but I think everyone benefits, wage earners, everybody benefits from having the ability to ask their accountant questions and get answers that apply to their situation, because the Google and the TikTok are not one size fits
Oh,
all.
Yeah.
I love a TikTok advisory. The amount of times I mean,
Mhm.
right? And I'm hearing it from everybody, which is interesting. I do
Yeah.
have one like follow-up question on that. So like if I think about it, advisory can be very overwhelming, right? And it encompasses so much.
Yes.
And as a person who has, we have small business, we have, 1099, we have all sorts of different stuff that's going on in our household here. And
Hmm.
I know when we've talked to our advisor, sometimes it gets overwhelming. They'll be like, you could do this, this, this. And I'm like, whoa, I need you to take it down a notch. Like I don't even know where to start. So do you like, what's your typical
Yeah.
process? Do you just go, all right, here's all the stuff that they could do. What I know that there's these 10 different strategies that we can do. We're going to only tell them about 1 and 2 this year. Next year we'll hit them with 3 and 4 and then et cetera. Or do you go, all right, here's the buffet.
Hmm.
What interests you? Like, how do you go about doing that so that it isn't overwhelming and it's manageable but yet
Yeah.
feels exciting that they could lean in on some of the stuff.
Yeah. So if you start with Intuit Tax Advisor, it'll tell you there are this many strategies and there's this maximum savings, right? That's a great way to sort of figure out who do I want to start with. If you're looking to like just get started, start with the people that you could generate the most tax savings. I will also say, because I think this is important, like a little caveat, we believe our benefit in offering advisory services is primarily in offering proactive advice and suggestions. We do not base our value when it comes to advisory on the tax savings, because we don't want it to be this year we were able to save you $17,000 in taxes because we put this thing in place that has the most tax savings in the first year, and next year it was only $3,000 in savings. Like, you guys didn't do a great job advising me this year. So we lead with the advisory component, the proactive guidance. That's where we like to come from. Now, with that said, the beauty of knowing our clients and not working with, a ton of clients means that we know these people. So we're not going to bring to a client, hey, if you maximize your 401k today, we have $12,000 of savings waiting on you. We know you're probably not going to maximize your 401k because we've been talking to you and you have a kid going to college, and maximizing on 401k or SEP contributions probably isn't in the cards, right? So that's something that we would keep to the side. But I do think it's still important to be able to tell them what those savings could look like. So we go through it first and say, based on what we know about the client, these are the strategies that I think would be most beneficial to them and most realistic. You can create a tax plan in ITA where you have like a short version where you can like, hey, client, this is what we were thinking of giving you. And then you can have a much more detailed version if the client goes through with the tax plan where you say, hey, here's how you implement it. Here's additional information on it. Here are the savings. We start with, here's what we thought would be good for you. Let's have the conversation. And then are there things that you'd like to discuss more? And then we can always turn those strategies back on for the client if they would find those helpful. But you're right. If it's overwhelming, they do nothing.
Right.
And the goal is
right. Totally. Right.
Yeah.
I call it the Cheesecake Factory menu. You're like, I don't know, it's too much. Like,
Agreed.
take it down a notch, right? But I'll still take $3,000 of a savings. So,
Exactly.
I'm not gonna take
Okay,
my-
I want to tap into, you talked about the tools you're using because you said two tools that help you out. And not only could things be overwhelming for the client, but for the pro, for the tax professional,
Yeah.
to start suggesting some of these insights. Can you talk a little bit about how this has like helped you guys and your firm and the tools you use? I know you just tapped on it a little bit, but
Yeah.
how it's helped you really move to this model?
So first of all, we run on Intuit. America runs on Duncan. We run on Intuit. So we started from day one with QuickBooks Online. I know I've told you a million times, I have 3 children. I started this business when my youngest was 1 month old. So cloud-based was the only way we could operate. So coming from QuickBooks Online, it was sort of a natural progression to go to ProConnect Tax Online. Now, while it was just natural because they're in the same ecosystem, QuickBooks Online does speak to ProConnect Tax Online. So we can take the data from there for our business clients, push it over to a tax return, save us some time. Prior to Intuit Tax Advisor, we had this like really cobbled together model, and that was hard because it wasn't standardized. It primarily resided with me and another CPA. We really couldn't bring in other people to help us because every time we did it, it was different. And we would use the planner tool in ProConnect. We would use a tax return and just sort of like mock up the numbers. We would use Excel, and if we had to like present something to the client, poor client, but we try to throw something together in Canva. Now that's a lot tighter because we can use the same data from ProConnect. It's already in ITA, no uploading, no downloading, none of that. It's just there. And then we can create, because we're not marketing people, we can create something that is branded and easy for the client to understand right from Intuit Tax Advisor, which is even better because now it's included with ProConnect. And when I say included, like no additional fee, which is major, that has taken away all the other things we were doing. And it's actually given us a deliverable that we can give to the client. And it's quicker. So we used to give people like an overestimated amount of an underestimated amount for tax savings. We say you should be able to save about $4,000 because we were doing those calculations manually. Now that we don't have to do them manually, we can give people more exact figures because ITA is calculating it for us. So we're using the tax return data from ProConnect. It's already in ITA, and that's also where we create the deliverable. And we started documenting our quarterly advisory calls. You can take notes in ITA now. So we document those advisory calls right in ITA. So if anyone goes back to the plan, you can see all the things that we talked about with the client, things that the client asked us about, and then we can go ahead and make the changes to the plan and then send the plan back out to the client. Saved us easily hours per client.
Love it. That's so great.
I do love it. So I know you have the quarterly meetings. So do you have a specific time of year that you typically start those advisory conversations? As I know, a number of strategies could, if you don't implement them by a certain time of year, they're off the table for that year. Right. So do you typically like hit a certain time when you start talking about this so they can start doing the actions necessary in order to enact them?
Yeah, so we probably shouldn't say quarterly because we have those conversations around the estimated tax payment deadlines, which for whatever reason are not quarterly.
Right.
But that's our calendar. We start those calls 30 days before the estimated tax payment deadline. We find that that works best for our firm because it allows us to catch up with the client, check on their progression with any strategies that have been suggested, but then we can also, for any clients that we do custom estimated tax calcs for, we can provide them with those calculations before the payment due date. So instead of doing just at quarter end, which we do for like some business clients, we do around the estimated tax payment deadline so that we make sure clients can get their payments in on time. So that first call is a little tight, I will admit, because we are also in the thick of it with tax season. But the benefit is that is, unless it's a new client, that's not the first call we've had, right? We just talked to them in December. So that first call can be a little tight. Some clients even push it to later in April. And then those next calls are before the estimated tax payment deadline. So late May, early June, September, some in early August. And then we have some right before we go on holiday break in November and early December.
That's awesome. Al-Nesha, we're so thankful for your time today. You were just a rock star, and to watch you grow over the years and just like be such a wonderful like partner, and just it's amazing what you've done with your firm and for your clients. So just thank you for sharing this for others to learn from you. With that being said, what's your parting kind of, again, last piece of advice that you could give someone that's really wanting to lean in this way, short and sweet?
This change is not just for your firm's profitability or for your client's benefit. This will change how you operate. It will take you from being a reactive, super busy person who's primarily working January through April and sort of trying to figure out what to do for the rest of the year to someone who has a more predictable cash flow and is actually being compensated for the work that they do. It will create capacity for you to think. This is not just a change for how you work. This will change how you prioritize yourself, how you prioritize your team members' self-care. Like, this is literally a triple win for all parties involved. So if you were thinking about it and you're only thinking about what it's going to do for your client or what it's going to do for your revenue streams, also think about what it's going to do for your mental stability, because it literally saved me when I was almost thinking about giving up in 2021.
That is awesome, awesome advice. So if all of you out there are listening, you heard it. You've been waiting for the right time, and the right time to get started is right now.
Oh, thanks, Al-Nesha. I love this conversation. I always love talking to you. You have such great advice, and I think people can take all the different nuggets that you've given. There's all sorts of different ideas in there. You don't have to jump all in. You can start with one package at a time or start just one client at a time. And I agree. Today's time to get started. So thanks, Al-Nesha. Appreciate it. Good talking to you. All right. Bye.
Thanks for being part of Deduct This, powered by ProConnect Tax. If today's conversation gave you something new to think about, visit accountants.intuit.com for more insights and resources made for professionals like you. We'll be right here, helping you turn expertise into opportunity.